Welcome back, you legends. I'm Dr. Cal, and this is going to be a very quick update video to talk about the PCE and unemployment data that's coming out today and tomorrow. So let's get right into it. Let's start with the stock market map. Today we had Apple, Nvidia, Google, generally tech rallying, and we also had software names continuing to rally. Remember what I said about software names last week, legends? As yields begin to top, as the dollar index begins to top, we get a valuation expansion in the market because, guys, higher yields suppress valuations, lower yields expand stock market valuations. And the most interest rate sensitive parts of the market are the high growth, high multiple software names. And so it makes total sense to see a continuation to the upside in software as we're continuing to see the 10-year yield pulling back, as we discussed last week, as it put in that major, potentially major double top formation. Okay, let's take a look at the different sectors leading today: tech, communication services, and industrials, and lagging were utilities and healthcare. So we're seeing a very typical risk on market action, buying the high risk stock market sectors, dumping the defensives like utilities and healthcare. So this tells us that the market is bullish. The market is optimistic heading into the PCE data drop. Now, we absolutely hate it when the market rallies ahead of a key event. So we have to be on the lookout for traps, for sell-offs. Let's actually look at the PCE and now casting model from the Fed. The Fed is now casting a core PCE of 4.2% year on year and a headline PCE number of 3.2%. Is that in line with expectations? The answer is yes. Here it is, legends. PCE year over year, consensus is at 3.3%, forecast at 3.2%. The headline consensus 4.2%, forecast 4%. So the Fed and nowcast model is in line with expectations. Remember, guys, 3 weeks ago when we had the CPI data drop, we expected it to surprise to the downside, come below expectations. Even though we expected it to be higher than the prior month, we expected it to come below expectations. And that happened. We actually went long at the close of the prior day. We closed near the high, then we closed near the middle of the day for an overall profit of roughly 60% on that trade. Now, very interestingly, guys, look at this. The market closed exactly at that same reaction level that we had after the CPI surprise to the downside. So we're back at that level, and the PCE, guys, will likely do the same thing, surprise to the downside, because the CPI surprised to the downside. And this is the PCE reading for July, not for August. So the CPI kind of gave us a heads up as to what's happening. Okay, so how will this play out? Now, we have to discuss the short-term stock market technical picture to actually understand what's going on. So we have PCE coming out. The market rallied significantly ahead of that PCE number, but we're now significantly overbought on the 1-hour chart. The short-term technicals, guys, are significantly overbought. This is the RSI down here below, guys. Whenever the market hits a 77 reading on the RSI, on the 1-hour chart, we tend to get a pullback. We tend to get pullbacks after every single time we hit this overbought reading. Now, these pullbacks, guys, usually range from about 1% and 1.5%. Okay, that means anywhere between $4 to $6 to $7 in terms of a pullback. Now, interestingly, I did point out in the last video, guys, if you remember, that I had a target of 451.5, and we hit that perfectly yesterday, 451.5, to hit these prior highs and these prior swing lows. This is a key pivot zone. Look at how many times we hit this exact same level. 1, 2, 3, 4, 5, 6 times. Several times as resistance, 1, 2, 3. Several times as support, 1, 2. Pivot zones, guys, are price points where the market makes a decision either to reject or to find it as support and bounce. Whenever we're below a pivot zone, it will act as resistance, resistance, resistance. Whenever we're above that pivot zone, it will act as support, support. So we're now below that pivot zone. We are overbought in the short term on the RSI. We're heading into a key event, and the market has already rallied significantly ahead of the event. So the most likely outcome, in my humble opinion, is a pullback. Either initially we get something like a small rally to 452.5, potentially 453, and then we pull back down to 445. That will now act as significant support, because it is another key pivot zone that we discussed. So I'm looking for potentially a small rally if the market reacts positively to a PCE that's below expectation. But because the market is significantly overbought in the short term, we expect that rally to produce a pullback to 445 and for buyers to step in at 445. Now, legends, overbought in the short term can stay overbought for a long time. It's really unpredictable how the market will react to these key releases. Interestingly, I do have a higher end target of at 457 to fill the gap from August 2nd. This is my target into next week, not necessarily this week, especially because we are already above the weekly expected move. In fact, we are near the 2 sigma move, which is 452.5. That's the 2 sigma move. This is the prior high that rejected here. It was the prior low that acted as support here. So I would be on the lookout for the market to reject at this level, 452.5, then produce a pullback back down to 445, and for this pullback to be bought. Now, because overbought conditions can stay overbought for a long time in the stock market, example, look at this, legends, overbought for quite a while. We did not really get any sell-offs, just a pullback to the 5-day moving average. Here it is, 5-day moving average. And here to the 5-day moving average. The 5-day moving average right now is at 445.6. And so the way we would actually trade something like this is not necessarily to short. We don't like to short an uptrend. Instead, we would be patient, potentially take profits as we get extremely overbought here, have some cash on hand, and then re-enter the market on this pullback as we get this U-turn, buy into the market again, capture that value from that pullback, and then ride the market higher as it continues to fill this gap at 457. Now let's discuss the VIX, legends. The VIX is the volatility index. It is very strongly inversely correlated with the S&P 500. When the market rallies, the VIX gets crushed. When the market sells off, the VIX tends to rally, and vice versa. So a key development, legends, on the VIX is that gap fill up at 13.9. We filled that gap yesterday, so this puts me on alert for counter trend moves in the VIX. A potential counter trend move up to 14.8 to test this prior low that will now likely act as resistance, and that will likely give us that pullback to 445 on the S&P 500. And so we have to be aware that we're getting those signs, overbought short term. We're heading into a key event, and the VIX has already realized that gap fill target. And we have to be aware that we could see a pullback in the S&P 500 as the VIX snaps back slightly higher in a counter trend move. What else is happening? Well, we had that anemic rally yesterday on the S&P as the smart money put in this indecision candle on the daily chart. This also tells us that smart money did not buy yesterday into the PCE data. And again, if we begin to see something that looks like this, the smart money moving down as the S&P rallies higher, that will put in a bearish divergence and will likely give us that rejection at 452.5, 453, and trigger that pullback to 445 that we're looking for. Very important, guys, very important. The NYSE summation index, the McClellan volume summation index for the NYSE is down here. Up top is the NYSE, down here is the S&P 500. And this indicator, guys, is the gold standard trend setting indicator. Whenever we get a green light, we rally, red light, sell off, green light up, red light down, green light up, red light down, green light up, green light up, red light down. So when do we get a green light? When we get a bullish cross on the summation index. When do we get a red light? When we get a bearish cross on the summation index. Where are we now? Well, let's zoom in. Look at this. We're getting close to a bullish cross. We're getting close to a green light. Not quite there, but getting close. The oscillator is already in the green, and so we're getting early signs of a major trend reversal to the upside, a new uptrend beginning. I discussed that in detail Monday in the Discord community and again yesterday in the update video. NASDAQ summation index, same exact look, legends, oscillator in the green. We're getting very close to a bullish cross on the summation index. It is flattening. So we're now getting ready, potentially again for that pullback, for the market to pull back within the next 2 to 3 trading sessions. And after that pullback, we will likely get that buy signal on the summation index, and that will mark a great objective long entry. Speaking of the Discord community legends, I do have a great announcement to make. We're getting extremely close to hitting 20,000 subs on the Money Time Machine YouTube channel. Thank you so much, legends. None of this would be possible without you. Please allow me to extend my deepest gratitude to every single one of you that supported the channel. I also want to thank all of you for your incredibly kind well wishes and prayers as our family navigates this health situation. Your support, legends, means the world to us. To extend a small token of gratitude to all of you incredible legends, I put on back the 70% discount for the Resurrected Legend annual membership and the 54% discount for the Resurrected Legend monthly membership. I opened 20 slots in each one of these to celebrate the 20,000 subscriber milestone. If you want to take advantage of the 70% discount, legends, you have to click pay annually. Otherwise, the payment will be automatically canceled. If you want to do the monthly instead, simply click join monthly to take advantage of the discount. This promotion will run through the weekend or until the 20 slots are all filled. Now, let's quickly revisit the economic calendar, legends. Friday, we have the non-farm payrolls and the unemployment rate, so we'll be back with an update after the market close to discuss the reaction to the PCE data. I'm keeping a very open mind for a slight continuation to the upside, guys, because I do expect PCE to come in slightly below expectations, above last month's reading, but slightly below expectations, just like the CPI reading 3 weeks ago. So I am keeping an open mind for a slightly higher high here towards 452.5 into 453.5. The 2 sigma move for this week, legends, is 453.5. So this area around here, I would not be surprised to see potentially the market try to push back into that area before pulling back to 445. Now, obviously, if PCE actually comes higher than expected, I expect an immediate sell-off into 445, but I do expect this area to hold. I do expect buyers to step in at the 5-day moving average just around this area. If you guys like these short, very quick update videos, do drop a like and I'll do more of these. If you like the longer format, do also tell me in the comments. I obviously, guys, want to do the content that you guys want with. So it's really important to let me know whether you want long format content or maybe these quick and short updates intra-week. If you watched the video till the end and you did not enjoy it, I do thank you for your time and attention. That's all I have for you today, guys. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.
Oh, wow.